Hello and welcome. You're watching Your Trades with me, Ankur Mishra and Mansi Dave. And in next half an hour, we'll discuss what happened in the market this week, and we'll also give you strategies for the next week. But let's get started with what happened in the market today. Mansi, today a day of red, slow, steady, but clearly in one color.
Absolutely, Ankur. I literally feel it when I say thank God it's Friday. What a week it was. Literal downtrends, range-bound moves, friction and a tight range with the market was trapped in. 25,200 and even lower than that, 25,149 to be precise, around 300 points at day's low. We have closed the Nifty. Bank Nifty too did show signs of volatility and eventually did close in red patterns. And if we talk about this week, Nifty did decline for the second consecutive week, mainly dragged by Titan, HCL Technologies. These were the major draggers. Nifty mid-cap and small-cap also did snap for the second week. We had a gaining streak in the broader markets, but this week the broader markets were also not performing or helping the market at least. The FMCG sector was the only sector which was majorly helping the market throughout the week, and the Nifty IT top sectoral loser, of course, after the TCS IT major results came out. The sentiment for all the IT players, be it the larger IT or the mid-cap IT space, did tank down, and talking levels, the broader markets too were witnessing downtrends. The Nifty gainers this week were HUL, Kotak Bank, NTPC, SBI Life Insurance, Power Grid. On the flip side, Titan, HCL Technologies, Apollo Hospital, Bharti Airtel and TCS were the major laggards which were not performing during the entire week. So it was clearly a challenging week for the markets. We did see consolidation and eventually it moved to the downtrends. But to decode what should be a strategy in the coming week, we have with us our market expert Rajesh Palavia, Head Technical and Derivative Research at Axis Securities. Rajesh ji, good afternoon. Thank you so much for giving your time to ET Now. We also have Sudeep Bandyopadhyay. Sudeep, good afternoon. Thank you to you as well for giving your time to ET Now. Rajesh, to start with you, it was a challenging week. We did see friction to a large extent everywhere. What's your take on the markets and how do you see the indexes performing for the coming week?
Good afternoon, Mansiji, and good afternoon, everyone. So, yes, Nifty corrected almost 1.30% for this week. And now Nifty slipped below to 20-day moving average on a weekly closing basis. So that's the negative development for this week on the Nifty near-term structure. Looking at the put-based concentration now, Nifty is trading below to the major put-based concentration of 25,300. And again, if we analyze on the call front also, the major call writers are now shifted their position at 25,300, 25,200 strike. So that clearly shows that, yes, we may see further more pressure if we continues to trade below 25,300 level for next week also. So that level is a major steep resistance for the Nifty in coming week. So any move above 25,300 may attract some short covering action. Till Nifty is trading up below 25,300, possible down move can extend to 25,050 or 25,000 level also. That's the major support area for near-term perspective. So could be 25,000 to 25,300 would be the range. Either side breakout will decide the major direction for the Nifty from here onward. For Bank Nifty, now it's almost trading near to its 20-day moving average support area, which is placed at 56,600 level. So if Bank Nifty breaks below 56,600, then we could see some more unwinding pressure in Bank Nifty also, and then possible down move towards 56,200 would be there for Bank Nifty also. On the higher side, the major call writing activity has been witnessed at 57,000 strike. So that level may act as a major resistance zone for near-term perspective. Any move above 57,000 may attract a short covering action in the market for Bank Nifty. Nifty mid-cap also slipped below to 20-day moving average. So I think a lot many stocks have witnessed profit taking in this week. So maybe we could see another 2-3 trading session where we may see some pressure or some more profit taking to initiate in the market.
Some profit taking is possible. Sudeep, I want to come to you. Hi, Ankur, this side. Market needs clarity, but currently we are in ambiguous state. We do not know what is happening on tariffs front. We do not know how earnings season will be because the start has not been as good as one would have liked. What is your assessment in terms of market direction?
Well, I think there is enough and more volatility going ahead as well. You are absolutely right. The results, corporate results, which will start coming TCS is already out. Others also will start coming and pretty fast over the next couple of weeks. But we are not expecting anything great. We are expecting a subdued set of numbers from Indian corporates at this stage as well. Yeah, there will be exceptions, but that I think will be the tone of the results. Beyond that, I think the tariff-related volatility, which is coming from US, is creating havoc for the markets. Forget specific tariff-related issues. Even corporates like TCS talked about uncertainties all around. They're not able to get the new contracts. The contracts are being postponed. Contracts are being slowed down because corporates in US are not sure, and they are pausing or slowing down the pace of growth. Now, under the circumstances, many sectors are getting impacted beyond the direct tariff related uncertainties as well. So I think this is something which the whole world is facing today, and India is also facing. India has, in addition to that, the challenges of corporate results not being as good as the valuations are. Remember, there is a gap between the valuation at which most of the stocks are trading and their fundamentals at this stage.
That was quite insightful view coming from Sudeep Bandyopadhyay. Sudeep, we'll come back to you for more. But Rajesh, I also want to know the trading ideas. I'm sure it is challenging during this time because we consider buying at dips, but we don't even know how much the market is going to see downside going further. But still, what are the trading ideas from your end?
If we analyze the sector-specific move, FMCG basket have done well despite these kind of volatility, and from that space, Dabur is looking promising. The way Dabur managed to give breakout on the weekly chart of contracting triangle pattern, and now stock is comfortably trading about to 200-day moving average also. So there is a sign of reversal for Dabur, and looking at the weekly chart also, this is the third consecutive week where stock is making higher high low formation. So it shows there is a sustained buying action is taking place in this counter. So Dabur is buy for upside target of 555. One can keep stop loss towards 518 to buy Dabur India. And I think another stock where we are focusing, that is, Piramal Enterprises. This stock is also looking bullish, and the way stock has moved up in today's session, now stock managed to give breakout of its previous swing high of June itself. And looking at the breakout on near-term, short-term structure, we believe that Piramal Enterprises can extend its gain 1265, the target where we are projecting for this stock. So buy and accumulate would be strategy with stop loss of 1175.
Piramal and Dabur, two buy recommendations coming in from Rajesh. Sudeep, when we are discussing about market direction, I want to know from you, in this state, which will be the sectors one should bet on? And also one question emerges, have we already made near-term top?
Well, I don't think we have made near-term top or even near-term bottom. I think volatility is the order of the day, and as we just discussing, till the time there is certainty or there is at least a kind of stability on the tariff front, the markets will keep swinging up and down. Counter-specific, sector-specific move based on news flow will be witnessed. As far as sectors are concerned, we do like cement quite a bit. Remember, this is a monsoon season, so there will be daily news flows which may not be conducive to the cement theme, but the fact remains, fundamentally and structurally cement does look good, and the leader in the cement pack, Ultratech, definitely is worth buying even at current levels. The other segment where again we are positive, leave aside the monsoon related seasonalities, is the construction infrastructure, and the leader in the pack there, Larsen and Toubro, at current valuation definitely looks good. Order book is kind of bulging. The global order book is also strong. The global orders are margin accretive. So overall margin profile of the company is also improving. So under the circumstances, current level, Larsen does look good. BFSI is another sector where pretty much everybody is overweight and are looking at opportunities. We do like the sector, but we want to play safe, and SBI from the PSU pack at current levels, considering the valuation comfort vis-a-vis the peers, private sector peers, it does look good from a medium to long-term point of view.
Absolutely. I second the thought over there. Sudeep, just like banks and financials, another pocket which I'm observing is the real estate basket. We keep on saying that the upcycle and the trend of real estate is intact if we talk about the longer term play. And also considering the sales and quarterly updates which we have seen for the real estate sectors, a few of the companies and the brokerage positive radar. Do you think if we get a dip, real estate is also a sector to consider?
Selectively, yes. We have to be a little careful because at the top end, the demand for residential is plateauing. It's very clear. The trend is clear. It's not falling, but there's a plateau. Incremental demand will be hard to come. So we have to be a little careful. However, commercial, particularly in the southern states, is booming with the GCC boom continuing. So one can look at the real estate players who have a good mix of residential as well as commercial in the key metros and definitely can be picked up. Beyond everything, I think DLF, considering the land bank they have, considering the potential over a period of 3 to 5 years, can be looked at current level. You can look at Phoenix Mills. Yeah, there may be short-term volatility and occupancy-related challenges, but fundamentally, if you look at a 3 to 5 year time horizon, even Phoenix looks good.
That's the advice which is coming in from Sudeep Bandyopadhyay. But I want to draw your attention, Rajesh, towards the FMCG sector and particularly HUL today. With the news flow, the stock was the hero of the day. But how should one see in terms of technical levels? What are your charts saying? Do you think this has the potential for further upside?
So stock was underperforming since last couple of months, and after this news flow, yes, there is a breakout on the stock. Looking at the weekly chart, there is a breakout of falling trend line on weekly chart, and in this move, now stock is trading about to 200-day moving average. So looking at the breakout for this week, we believe that now if stocks continues to trade about 2480 zone, I think then possible rally may extend further as there is short covering action was already played out in this counter. So possible up move towards 2580 we could see for HUL. And I think whole FMCG basket is was consolidating since last couple of months, and now most of the stocks are now giving a breakout on the near term chart, like as we discussed about Dabur. Also Marico is also holding the ground. Godrej Consumer is also looking strong on the near term structure. So I think whole FMCG basket is now trying to give breakout, and we may see further more continuity in Nifty FMCG as well as in FMCG stocks in near future. So one can look to buy HUL, Dabur, Marico. All these stocks are looking attractive.
FMCG is the key at present, and during the entire week it was FMCG which was supporting the market. Rajesh, just like HUL, we did see Glenmark Pharma also performing in trade today. It started with 9-10% up move, and while we were closing it was around 14% up, of course because of the news flow that the arm has inked a $700 million global licensing deal. Now, do you think this is just an upsurge because of the news flow? Will it sustain, or one should consider exiting the position if they have in?
So I think this stock we have recommended multiple times during the interaction on your channel, and looking at the breakout in today's session especially. So there is a breakout of rounding bottom formation on daily weekly time frame, and looking at the breakout and the intensity of buying in the counter, we believe that yes, we could see further more upside in the counter. Yes, one can wait for some cool off action towards 25, 2150, 2120 kind of zone. If you get opportunity around those level, would be attractive level again to re-enter in this counter. But yes, looking at the breakout, we believe that 2400 would be the next target for the Glenmark Pharma. So buy and accumulate would be the strategy. On the downside, 2100 should be the stop loss to hold the long position, as well as one can initiate a new position also if you get any minor dip in this counter.
All right, that's the advice which is coming in for Glenmark Pharma. But Sudeep, I want your opinion on the IT sector. With the start of the show by TCS, that has been not great. Stock was under pressure on Friday. But how should one look at overall sector? Because the ambiguity will remain in terms of news flow. should one try to make a fresh position in IT stocks while they are available in better price?
Look, I think you rightly said uncertainty will be there. I think uncertainty stems from the fact that the fresh orders aren't coming the way they were expected, and the existing projects are also getting either stalled or are getting slowed down. So this definitely put pressure on the large IT companies and even mid-cap IT companies. And this pressure will be visible. None of them will be in a clear position to give a forecast or a prediction about the year. Forget future. Even the next quarter, they won't be able to predict with accuracy. Under the circumstances, it is better to be little careful. Now, if you are a long-term investor and if you're looking to pick up IT for your portfolio, then yes, at some point of time, these are opportunities for buying. Now, whether the opportunity is today or next week or the week after, it is very difficult to predict. But if you are convinced on IT from a long-term perspective, start buying slowly. There is no problem. Fundamentally, these are good stocks. They will perform eventually, but now is the time of volatility.
It's the time of volatility, and one should remain cautious in these market scenarios. Sudeep, Rajesh, gentlemen, thank you so much for joining with us today and helping us and our viewers navigate through the market and to strategize the market in the coming week. With that, it's a wind up for this session of Your Trades, but there's a lot on the other side, so you stay tuned with ET Now.